My name is Simon Erickson. I'm with my fellow 7 Investing lead advisor, Luke Hallard. Luke, we got some kind of, I think, exciting news, but maybe bittersweet news. ShockWave Medical has just got their offer to be acquired by J&J. And typically we don't talk about our recommendations too much out in public forums, but I think it's okay in this instance because there is a buyout on the table. This is a multi-recommendation of both the 7 Investing team that you brought to the scorecard quite a while ago. Intravascular lithotripsy. As I understand it, Luke, they are putting sonic waves through your arteries of your body. Pretty cool technologies, but maybe can we start kind of introducing ShockWave?
Yeah, this is an old recommendation for me. I put it on the scorecard back in February 2020, and I've held this one on my own portfolio for quite a while. And an acquisition has always been potentially on the cards because these guys basically invented this market, and they're the leaders by far. They're the only company out there with this technology, so clearly going to be of great interest to their much bigger sort of behemoth competitors. Should we talk a little bit about what they do and who ShockWave are and why this is such an interesting technology?
Yeah,
basically, like an increasingly common problem in the Western world, but actually all around the world, is just increasing obesity. And I think in my first recommendation report, I likened this to like line scale in your pipes in your house. You know, sometimes you have to like clean the kettle, or you have to, clean your gadgets because the pipes get clogged up if you're in like a high lime scale area, which I am.
The shower head gets clogged up, right?
Yeah, exactly. So you have to descale your shower head to get like a nice powerful shower again. Well, that happens in your arteries as well. Like they clog up literally with the same stuff. They get calcified. That can lead to heart attacks. It can be a precursor to strokes, all sorts of other, very bad medical conditions. So there's been technology to help people with this for many, many decades. But ShockWave introduced a brand new therapy when they founded the company nearly, I think, 20 years ago. And this was lithotripsy, which is basically the Greek word for breaking stones, I believe. And essentially, they put a catheter. So a catheter is pretty well understood technology. You put like a thin, flexible tube into your arteries, and then they have a little, almost like a audio boom, like a sonic boom inside your arteries, which breaks up the calcium, but doesn't hurt the soft vessels of the arteries in the body. And so this was really quite revolutionary. Much better outcomes for patients, far fewer side effects and other sort of knock-on impacts, a much higher success rate in breaking up calcified arteries. And the company was really exciting because they were just starting to get into new therapies, more specifically within the heart, and they were looking potentially on the future roadmap at doing things closer to the brain. So I really wanted to hold this stock for a long, long time, like another 20 years to come. But unfortunately, the Johnson & Johnson acquisition that looks like it's been accepted by the board of ShockWave today does look like it's going to go through. And so that's going to kind of end the story for us ShockWave shareholders.
Yeah, it's really a success story, Luke. Like you mentioned, a new technology that not only were they using, for the arteries are all around your body, but for coronary artery disease too, right there in the arteries of the heart, which of course are super important and approved not just in the US, but also they were expanding into China, into Japan. And I think at that point, the larger, big pharma companies and medical device companies start saying, hey, there's really something to this. We're going to go after the innovative leader. And that's why you saw several offers have been on the table. J&J has approached him before. Penumbra has approached him before. Boston Scientific has approached him before. I mean, when you see the sharks in the water like that, it's kind of a matter of time until somebody gives you an offer that you just have to say, okay. And so $335 on the share is on the table right now for J&J. There's a couple details in this I think that are worth kind of getting into. Right, this is not just immediately accepted. Obviously ShockWave is very excited about the opportunity to be acquired by J&J, but there were some terms that I think that investors should know about. You've done some diligence looking into those this morning. What did you find out, Luke?
Yeah, so it looks fairly standard, actually. I did dig into the 8K, which is the formal sort of 100-page plus announcement that goes out when there's a press release or, a big market-moving announcement like this. And there's actually a legal case, which has been press released in the last hour or two. So I just did a quick dig into that just to see what what that was all about. So the legal case alleges that insiders are enriching themselves, and the company has agreed a fairly punitive breakup fee if the company sort of reneges on the agreement to be acquired and perhaps takes like a superior deal that might be out there. And I don't know that there really is any substantive rumors of a superior deal. So when I dug into the 8K, nothing looks terribly out of order. It looks pretty standard. So I think what the legal case is pointing at, insiders enriching themselves. This is essentially any existing stock options and RSUs get vested at the acquisition price of $335. That's pretty normal, because when you acquire a company, you don't want this sort of hangover of a really complex kind of cap table with stock vesting in the future. You just want to clear the decks. So that's kind of normal. And I suppose it is interesting. There's a $448 million, it's kind of $500 million breakup fee. And it seems to be a bi-party fee. So essentially, if either the future parent, Johnson & Johnson, or ShockWave, the company, if either of those walk back the deal or recommend an alternative, for example, if ShockWave's board recommends an alternative deal to shareholders in the future, then they'll owe essentially $500 million to Johnson & Johnson. Again, that's fairly standard. These things are expensive to get into, and they're going to have to employ expensive lawyers and incur a bunch of costs. So, maybe that's a large number relative to the market cap today, which is not too far off of the $13.1 billion enterprise value that the acquisition is due to complete at. So maybe relatively substantive, $500 million, but again, nothing too unusual. I would be surprised if this legal case really had any legs, or if the transaction didn't go through.
It is kind of interesting that it's a bi-party breakup fee, something that, maybe it's not a problem, but it's just something that raises your eyebrow is, that ShockWave, if they canceled the agreement to take another offer, would be on the hook for that. It's quite typical that you'd see a shop clause, or, you give a company that's being acquired an opportunity to go out there and shop for other deals. J&J obviously doesn't want them to do that. They want them to say, hey, let's get this done quick and let's start making some money off of this. They have obviously got a superior size of marketing and sales force to go out there and, kind of grow this internationally. So I think it makes sense. It's an all cash deal. So you're taking cash. You're not getting shares of J&J in this. And, I think that it's going to be, I agree. I don't think it's a big enough one to really get too many eyeballs on keeping this from happening. Luke, are you a fan of this buyout offer? Is this something we wish we could have held ShockWave longer for, or is it a fair deal for shareholders? Any thoughts on the terms here?
I'm not a fan personally. I really feel this company and its technology have a very, very long runway. We're quite early in the story. I've made a nice return. If I look, I'm actually doing every day. I'm publishing one stock from my own portfolio. So I actually covered ShockWave Medical just a couple of days ago. And I had an interesting experience with this one personally. I bought it back in early 2020 for the first time. Towards the end of 2021, when markets just looked generally a bit frothy, I took some money off the table. I sold some of my ShockWave stake because I didn't feel I really understood this stock as well as I did some of my other recommendations. And then the stock didn't suffer when other growth stocks really took a pounding in 2022, 2023. And so that caught my eye. Why hasn't this gone down with everything else in my portfolio? So I really dug quite deep at that point, went much deeper on the due diligence. And I realized actually I'd probably made a mistake. I'd sold a really good quality company. So I bought back in 2 more times in 2023 at a higher price than I'd sold, because, I really live by that adage, water your flowers and trim your weeds. And this was clearly a flower that I'd accidentally trimmed. So I added back. And I'm net up quite nicely on my overall position, particularly with the little bump in the share price today. But I would rather have continued to be a shareholder. I won't be holding my stock post the transaction. I've got no real interest in owning a Johnson & Johnson.
Yeah, absolutely. And, we'd encourage everybody to check out 7investing.com. Again, we don't typically reveal recommendations. We try to keep those for our paying members. But for this one, since there's an offer on the table, we think it's going to go through. we can chat a little bit more about this. This was our team recommendation in February, just 2 months ago, Luke, right? So in 2 months, we've gotten a 41% return, which is great. But like you said, we kind of thought there was so much more opportunity. I think the investing thesis, the thing we really liked about ShockWave was, one, innovative leader in its field, right? Nobody else was doing intravascular lithotripsy like this. But then just the market expansion, right? They were finding ways to expand this from just the arteries and the cardiovascular system to the end of the heart there. Got approvals in the US, translated to China and Japan internationally very, very well. Man, that's what you love to see, a company that's defining its own path out there and succeeding very, very well. And it was a company that you and I, we even said we love this company. If you go back and watch the deep dive and the conversation we had in February, we certainly thought there was a long growth runway. And, it's going to be successful for J&J. I still think it's a good outcome for the bigger picture of what they're trying to accomplish. You got a big organization with lots of more resources out there. There was an individual investor. I'm with you. It kind of stings a little bit. You wish you could have held on for a little bit longer. Oh, well.
Yeah, and you brought that, you brought ShockWave as your pitch for the team recommendation back in February,
Yep.
And that was incredibly well timed. And I think we all knew an acquisition was possible, and you called it out in your team rec DD that essentially there was almost a line under how far the valuation could fall. So kudos to you, Simon, for bringing an excellent company back to the table for a third time just 2 months before that acquisition got announced.
Well, thank you very much, Luke, and kudos to you too for also making it a 2-time recommendation on the scorecard before that. So we like ShockWave. Sad to see it go a little bit as an individual investor. It seems like it is going to be going through $335 a share from J&J. That's certainly a good outcome, like we said. And we wanted to post some of the details so investors can kind of see what's going on, understand some of the diligence. Luke's done some fantastic digging into that, and we wanted to share it here on the live stream today. So we will post this to our 7 Investing podcast and also a recap in an article on 7investing.com. Luke and I are going to do a couple more of these live streams in the next couple of weeks. I think these are kind of fun just to kind of give some insight on what's going on out there. Luke, yeah, I think it's in the middle of the evening for you.
There's a ton of other great companies on the scorecard.
Yes.
And if investors are releasing some of their money from ShockWave Medical, as I will be fairly soon, well, we've got a bunch of really interesting options on the scorecard for you to invest in that are probably offering a superior return than the 2.5-3% upside that's left on ShockWave if that transaction goes through. So maybe we can pick up on one of those interesting companies on a future live stream.
Absolutely. And now, Luke, you were 10 days away from Best Buys. I'm curious to see what your Best Buy is going to be here for April. Favorite company on the entire 7 Investing scorecard.
It was nearly going to be ShockWave. I've been looking at that.
You and J&J, great minds thinking alike there. Yeah. Well, thanks everybody for tuning in. Like I said, we're going to try to do a couple more of these live streams, but that's the update we have for you on ShockWave SWAV with an offer on the table from J&J. Hope you have a great weekend. We'll talk to you again soon.